All right, you got to listen up, everybody. My next guest has been on with me several times. I have with me David Fisher, and he's with Landmark Capital Gold Group. You're not just with him, you're the CEO of the company. And, you know, you've been on several times, and every time you talk, my mouth wide just drops open, my eyes get like saucers. Welcome to the show. Tell everybody a little bit about you and what you're going to talk about today.
Yes, you're right. I guess the CEO means that I'm the important guy, but I put on my pants the same way everybody else does in life. So, real down to earth, grew up on a farm, but I've been in the precious metal industry for 22 years. I'm the owner and CEO of Landmark Capital Gold Group, and we are here in Phoenix, but we also on a national level. And just to give you all the accolades real quick, I've done lots of radio, tons of it. In fact, since I saw you last, I've done national radio on 55 stations for an hour long in one segment, and several other segments, about I think 7 since we've talked just less than 3 weeks ago. Used to have my own radio program here in the Valley called The Market Closed, and I've done programs for other companies called Wealth Wednesdays, which was talking about how you can roll over your retirement plan in physical gold under your IRA and 401k. We're accredited members of the Better Business Bureau. We have an A+ rating in our industry. There's a equivalency of that. It's called ICTA, Industry Council Tangible Asset, and we're members of ICTA, and plus we're members of 2 grading companies, PCGS and NGC, and on top of that, I'm a member of American Numismatic Association. So we have all the accolades, and we believe in education, and that's really why I come on your program, to educate people, and then they can take it a step further in having free consultations so they can learn a little bit about how to protect their money.
Well, we all need to do that. We need to protect our money.
Yeah, I was saying, if you don't take care of your money now, it might not be there to take care of you.
I'll tell you something, and you've written a white paper, several of them, but one of them that we've been talking about several times since you've been coming on is the coming bail-in. Tell everybody about what that is.
The bail-in, and we're going to get a little more in depth in that on other shows, but the bail-in is in essence something that has happened in 12 countries where countries went into their citizens' bank accounts and retirements and seized a portion of the assets to pay down their debt structure and support their currency. We have the same issues going on in America here. In fact, there's more information in America about this coming bail-in than all the 12 countries combined. But the couple countries that are probably well known in this, Cyprus, where they seize citizens' bank accounts, Poland, they seize 50% of their citizens' retirement account. It's happened in lots of different countries. So our country has moved aggressively. In fact, I'm going to talk about one of those things here towards the end of the show about what they've done here, and I'm going to explain the Dodd-Frank Act here in detail on how that actually is working towards the bail-in.
One thing I want you to get out now on this, because you've had people that call you and sort of, you know, they're a little skeptical. How do you know all this, you know? And I want you to get that out now before I open up the lines.
Everything I say, everything I've put in print, I can document. Everything that's written in this white paper has been on either Fox News, Reuters, FDIC.gov, our government has wrote about it, major financial publications around the world, and this is from a publication from the International Monetary Fund, a publication from the FDIC. So this is all documented facts. It's not anything conspiratory or misleading, and that's how I write.
All right, so we've got our lines open here, and we want everybody to be able to chime in if you want. Also, everyone's going to get his white paper. It's the coming bail-in, how to protect your retirement and bank accounts from government seizure. And our number here is 602-277-5369. Toll free, it's 1-866-536-1100. What are we going to talk about today?
Well, you know, last time I was on your program, which is a bit ago, actually I've been on your program quite a bit throughout the summer. In the beginning of the summer, I started saying the warning. I said, get ready, we're going to have a downturn in the stock market. And that was one of many days where your eyes got big and your jaw dropped, and you know, many of your listeners thought the same, and they, you know, that's not what we want to hear. We want to hear everything's going to go up forever. But the reality is I would rather share what I think is going to happen, if it's good or bad news, and people can react. Well, I was right, and I don't want to toot my own horn, but the market has gone down, and I'm making a prediction again today. It's going to continue, like I said last time I was on your program, it is going to continue to go down, not drop and go to the bottom, not a collapse, but it's going to slowly let the air out of this bubble that's been created, at least through the rest of this year and possibly the first quarter of next year. And there's people who are way smarter at this that are saying the same things that I've done studying on. And you know, you never want to fight a bear market, and you never know you're in a bear market until you look back and say, we were in a bear market. But the only obvious thing happens is like 2008, when it was like what you call a falling knife. The market was going pretty much straight down day after day, week after week. That's not what this market is right now. This is going to bleed people away. This is going to take over a period of months, and it traps people in a market thinking, okay, next week maybe it'll go up, next month. I had a client that just rolled over their IRA. They started the process of thinking about it and contacted our company in June. Their IRA is worth $139,000. We're getting a funding notice tomorrow, and they're going to invest. Their funding notice is for $104,000. They've lost $35,000. $35,000 in just 3 months. But their stockbroker is telling them it's okay, we're going to be fine. If he would have kept the course, I'll say by the end of the year, his portfolio probably worth $75,000. If he would have put it in a gold when we first started talking, his portfolio from $139,000 would probably be about $146,000 to $150,000, depending on the product he went in. So don't fight this market. I said that the Fed months ago was not going to raise interest rates, and they didn't. I'm telling you that we're possibly going to even have another round of quantitative easing, which means they're going to inject more money in the system. So something is going to give here coming up. And your listeners, if they feel something deep down in their gut or their spirit that they didn't fix the banking system in 2008, that the stock market is highly overvalued, wake up and follow that feeling. It's as simple as getting eggs at the grocery store, even though it wasn't on your list. You say, I got to get it for some reason, and you go back home. It's like, I'm thinking, I got eggs because I needed them. It's that feeling that people are ignoring because they're saying, I hope next week will be better. Don't ignore the feeling. Address the feeling, admit the feeling, and act on the feeling, and you'll be better off in practically every area of your life.
Well, I also want you to, before you go into the next thing, because I know it's all about education for you, but I also want you to tell them what you think, because you mentioned something about the IRA and what they can roll it over, and you have figured out something that you said that not very many people can do.
Yeah, there's a plan that was put together by an attorney that we've used for 6 years that has figured out a way where they can roll over their retirement into physical precious metals, gold and silver coins, and hold them in their hand, not in a third-party depository, and they don't have a tax liability. So they're not taking a distribution. It's all under the umbrella of an IRA. Most companies have not figured this out, but the ones that have, their fee structure for this is somewhere on their attorney fees, somewhere between $995 and $1,995. Our attorney only charges $385. So it's not only doing the end goal of getting metals in your hand and holding it so you're exempt and protected from this bail-in, but it's also very cost-effective compared to other companies.
Now, I want to give out some of your information, which is the website, which is landmarkgold.com. Their phone number is toll-free 877-448-2646, or you can also call them from here, which is direct 602-287-9200. You can also just go ahead and get the call here, because we want everybody to get the how to protect your retirement and bank accounts from government seizure. Our number here is 602-277-5369. Toll free, it's 1-866-536-1100. We're going to go to a break. Tell them quickly what we're going to talk about when we come back.
I'm going to tell them what 4 billionaires have been said recently about the stock market and what's coming. It confirms everything I've been saying.
Well, you guys, you got to hang on tight. You're going to listen to that. We're going to come back and talk further about it. We've got our lines open here for everybody to get his white page that he wrote, and it's something that he can back up with you. He does free consultations. You can call him, and you can talk to him a little bit about it. It's how to protect your retirement and bank accounts from government seizures. Again, our number here is 602-277-5369. Toll free, it's 1-866-536-1100. A+ rated with the Better Business Bureau. He does free consultations. Call him at 602-287-9200. We'll be back in just a minute. We're back and we're talking with David Fisher. He's the CEO of Landmark Capital Gold, and we have our lines open here and getting some feedback in here. I don't know what that's coming from, but anyway, so if you could help me with that, I would appreciate that. Anyway, our lines are open here, so you can call in, you can chime in, you can ask questions, you can get just get this the white paper on the coming bail-in, how to protect your retirement bank accounts from government seizure. Our number here is 602-277-5369. Toll free, it's 1-866-536-1100. And before we went to a break, we were talking a little bit about some of these different things that frankly, are a little bit concerning, you know, especially for people who are losing as much money as you've been talking about. Should a person get all of their money out of the stock market?
No. The short answer is no. The long answer is maybe and possibly yes, because here's why. It's one shoe does not fit all. But most stockbrokers say put up 99% of your money in stocks. That's not the right way to properly protect your portfolio. And you know, when billionaires come out, there's 4 billionaires recently have come out and said, be very concerned about what's getting ready to happen in the stock market. A guy by the name of Andy Redleaf, he's a very successful hedge fund manager who accurately predicted the major downturn in 2008 in America. He said recently, we're living in scary times once again. A guy named by billionaire Sam Zell told CNBC something very similar. He said, quote, people have no place else to put their money than in the stock market, and it's getting more than its share right now. It's very likely that something is going to give here, and I don't remember a time in my career, and this guy's relatively old, where there has been this many wild cards floating out there. A guy by the name of Chris O'Day, he probably has the most important record, but he said everything points to being in a bubble. You never know the height of the bubble until you look back. But recently, just today, Carl Icahn, who is probably one of the most well-respected, has the best track record on Wall Street, came out and with a actual video, and he has recently made $1 trillion for his shareholders. So this is not a Johnny-come-lately. He's seen it all. He's been around for decades in the market. And he put out a video that is talking about get ready, because this thing is going to pop. Not pop, but have a downturn in the market. He said it's not a matter of if anymore. It's a matter of when. He says Wall Street and corporate America, Washington, is dysfunctional. They're not operating and fixing anything. He's talking about the debt, where it's going to come back and haunt us. He talked about the Fed. You cannot have zero interest rate policies and not have severe ramifications. And he goes back to 2002 and 2003 when we had close to zero interest rate policies, and as a result of that, that was the catalyst for creating the bubble in 2008. He says we are like medicine that's being injected, and we will never know the outcome until it happens when we get off this drug. And they just pulled the plug on the drug recently. They stopped quantitative easing. If you look at and say, when did they do that? Shortly after that, the market stopped going up and started falling. So that's why I'm saying, unless the Fed comes in and does another round of quantitative easing, the market is going to retrace. That's why Carl is saying this. In fact, he goes on and says that this thing, it could be one of the worst times in history for the stock market. So, you know, I can't say enough to have the people wake up, because the Fed's balance sheet prior to 2008 was $500 billion, and now they're at $4.5 trillion. You cannot have a successful central bank doing this thing and not have severe ramifications for it. So he says that we should have raised interest rates months ago. But right now it's actually harder to raise interest rates, and that's why he's saying the exact same thing I've been saying on your program, that the Fed is darned if they do, darned if they don't. They raise rates, is bad for stocks. That's why when you heard them not raise rates, the background, the stock brokers were cheering on the floor of Wall Street. If they don't raise rates and they don't provide quantitative easing, we're going to have this market that we've been having for the last 3.5, 4 months. A lot of volatility and a lot of downward pressure. So the days of double-digit interest rates, and there's a lot of people saying this, are gone right now. The double-digit, of your portfolio going up double digits. Expect 1 to 4% returns on your money for at least through the year 2020. So 4 more years, we're going to have very low returns in the stock market. So am I telling you to get out of stocks? No, I'm just saying if you believe that the stock market has these fundamentals where a ratio of 28 to 30 to 1, in other words, your price per earnings ratio, the normal price per earning ratio is 4 to 8. We're at 28 to 30. It's a bubble. This is all the same things that we saw in the .com. In fact, that's what Carl Icahn is saying. So wake up, don't fight a bear market, because this is not going to go pop, but it's going to retrace quite a bit, thousands of more points, and it's going to affect people. That person I just told you about, his name is Jerry, that want to roll over. I'm not going to mention the company's name, but I showed you the document. You said, I heard of them. It's a major brokerage company on Wall Street. You're nodding your head, so she's agreeing. Carol is. There's lawsuits, from one lawsuit, $9 million from FINRA. I think this company is upside down, because it took me 7 consecutive days for their on the phone with them to get the client what he wants to do in rolling over his money from out of their company. I went on the internet and I saw all these lawsuits happening. I went on and saw all these complaint boards. The first one I saw on the complaint board was 23 hours ago. Just happened. He says, I got over $500,000 with them. They got terrible customer service. They won't do what I want to do in transferring my money. I'm going to pull all my accounts out. This is the same type of thing, Carol, that I saw in 2008 and 9. When people tried to pull their money out, there was all kinds of hoops they had to jump through, all kinds of nonsense. I'm telling you, there's problems that are coming. We're not addressing our $18 trillion in debt. The government's probably not going to shut down this time, and that's a whole nother topic, because Speaker of the House, John Boehner, just stepped down. But he also stepped down from Congress. That's rare. When has that ever happened? Gingrich did, but then, the affair came out. John is a devout Catholic, and he met with the Pope. I don't know what that meeting was about, but I don't think he knows a lot about the monetary system and how the government works. And I think he knows that something's getting ready to happen, and they can't get this thing under control called their debt. And the debt and the deficit, the dollar and the deficit of our country is in trouble, because we've had the biggest sell-off in the dollar in the history of our world. This year, China sold $213 billion. They're the biggest buyer of our debt. So who's going to hold the debt if they don't? And that's where the bail-in comes. We're bankrupt as America. We are a bankrupt country. I hate to be negative. It's the truth. We just don't want to face it. We haven't filed the papers yet. And the reality is, you shouldn't have 100% of your money in stocks. You should diversify. And I've been saying this over and over. Put 25% in stocks. Put 25% in cash. Put 25% in real estate. Put 25% in precious metals. And if people would do that, prior to 2008, they would be fine today. Because stocks went down 45, 50%. Real estate went down the same. Cash was even. Metals went up 72% in a multi-year-long run. We're getting ready for the same exact thing to happen. I say, take some money off the table, diversify, because that could happen, and this could trigger on a bigger event called the bail-in, where they could seize, and here's the article, I have it right here, the FDIC. Here's the template for seizing the people's bank account. Here's what it says. The U.S. strategy to develop in the next context of powers provided by the Dodd-Frank Act of 2010, they're going to assign losses to shareholders, people that buy stock in banks, and unsecured creditors will also have losses. That's people depositing money in the bank. They're the unsecured creditors. The money goes to the government. This is on FDIC.gov. Here's the report from the IMF saying here's the bail-in that needs to happen. And the Wall Street Journal interprets this bail-in is saying for America it's 56 to 71%. So imagine for a second we wake up in the morning, you can't access your bank account. It sounds crazy, but it's all set up. You can't access your bank account. You can't access your 401k, your IRA. You can't do anything because it's locked up. And the government has seized 56 to 71%. They pay that down. The debt, because there's $18 trillion in retirement and bank accounts, there's $18 trillion in debt. This is why it's important they diversify and move over and roll over their retirements and get some precious metals physically in their hands without a tax liability. We have the plan.
Well, they have the plan, and they do free consultations. The toll-free number is 877-448-2646. The phone number here is 602-287-9200. You've got to check him out on the website. All the information is there, and he wants to educate you. He wants to talk to you. It's landmarkgold.com. We're also going to let you get that coming bail-in, the how to protect your retirement and bank accounts from government seizures, and you can call here. Keep on calling, guys, at 602-277-5369. Toll free, it's 1-866-536-1100. Also, call him direct. Get a free consultation with him. Find out how to protect yourself at 602-287-9200.